Have you ever looked at your bank account after a year of investing and asked yourself, why am I not seeing the results others brag about? Maybe you put money into a rental property expecting cash flow, only to deal with broken toilets, late rent, and rising property taxes. Or perhaps you bought a property hoping for appreciation, but the market didn't care about your plan. Now imagine putting that same money into the stock market, buying shares in companies like Apple, Tesla, or even a low-cost ETF, and seeing double-digit returns without fixing a single faucet. In 2025, the rules of investing are shifting fast. With the rise of fractional shares, commission-free apps, and AI-backed trading platforms, the stock market is more accessible and rewarding than ever. Meanwhile, real estate is getting hit by higher mortgage rates, stricter regulations, and increased competition. So the big question is real estate still the king of investments, or is the stock market taking over? Let's dive in and break it down, step by step. Stock market versus real estate: why smart investors are switching in 2025. Section 1. Understanding the basics: stock market versus real estate. What is stock market investing? The stock market allows you to buy small portions of public companies. When you buy a share, you become a part owner of that company. As the company grows and profits, your investment grows too. And with the option to earn through dividends, stock splits, and capital appreciation, the market offers multiple ways to make money. What is real estate investing? Real estate investing involves purchasing physical properties like residential homes, apartments, or commercial spaces with the goal of earning rental income or selling for profit. It's a tangible asset. You can touch it, renovate it, and rent it. Section 2. Comparing risk and volatility. Real estate feels safer. But is it? Many investors believe real estate is safer because it's physical and less volatile. However, this security comes with hidden risks, vacancies, market crashes, expensive repairs, or legal issues with tenants. Example: a house in a booming neighborhood can lose value overnight due to zoning changes or natural disasters. Stock market volatility: friend or foe? Stocks fluctuate daily, sometimes hourly. But unlike real estate, you can instantly adjust your position, sell quickly, rebalance your portfolio, or hedge against losses using ETFs or options. Section 3. Liquidity and access to cash. Selling a house takes time. Need cash fast? Real estate isn't your friend. It can take weeks or even months to sell a property, and that's if the market is good. Not to mention the closing costs, realtor fees, and taxes. Selling stocks? Instant. With just a few clicks on your phone, you can sell shares and get your money within days. This liquidity makes the stock market ideal for emergencies or quick shifts in strategy. Section 4. Initial investment and barriers to entry. Real estate is expensive. Even with loans, getting into real estate can cost you tens of thousands of dollars upfront, between down payments, closing costs, inspections, and renovations. Stock market: start with just $1. Thanks to fractional shares and zero-commission platforms like Robinhood, Fidelity, and M1 Finance, you can start investing with as little as $1. No agents. No paperwork. No tenants. Section 5. Maintenance and management. Real estate is not passive. You'll be dealing with property managers, repairmen, tenants, taxes, and more. Even with a property manager, you're still responsible for major decisions and emergencies. Scenario: a midnight call about a broken water heater? That's your problem. Stock market is truly passive. Buy. Hold. Collect dividends. No calls, no repairs, no headaches. Section 6. Taxes and deductions. Real estate has more deductions. Real estate investors can deduct mortgage interest, depreciation, repairs, and travel expenses. This can drastically reduce taxable income. Stocks have lower capital gains taxes, long term. If you hold your stocks for over a year, your profits are taxed at a lower rate. Plus, you don't pay taxes until you sell. And if you use retirement accounts like a Roth IRA, your gains may be completely tax-free. Section 7. Diversification and growth potential. Real estate is limited. You might own 1 or 2 properties, usually in one city. That's not true diversification. If the local market crashes, your entire investment could be wiped. Stocks are instantly diversified. Buy an index fund like the S&P 500 and you own a slice of 500 companies. Or invest in sector-specific ETFs like tech, energy, or healthcare to spread your risk. Section 8. Return on investment, ROI. Real estate ROI depends on management. Your returns heavily depend on your ability to manage tenants, keep occupancy high, and control costs. Even then, ROI typically ranges between 6% to 10% annually, before taxes and expenses. Stock market ROI is historically higher. Over the last century, the stock market has averaged 10% annual returns, even with crashes and recessions. And with compound interest, those gains snowball fast. Section 9. Time commitment. Real estate is a part-time job. Managing properties, even just one, requires time and energy. You'll be chasing contractors, screening tenants, handling leases, and tracking finances. Stock market takes minutes a week. Once your portfolio is built, you can automate investments and rebalance quarterly. That's it. Section 10. Market trends in 2025. Why real estate faces more challenges. Rising mortgage rates are pushing buyers out. Cities are increasing rental regulations. Insurance premiums and property taxes are skyrocketing. Why stocks are winning in 2025. Tech and AI sectors are booming. Retail investors have better access than ever. Global economic recovery is driving market optimism. Final verdict: stock market wins in 2025. While real estate has long been considered a safe investment, the 2025 investing landscape favors stocks, especially for new investors, those with limited capital, or people who value freedom and flexibility. If you've been debating between real estate versus stock market investing, 2025 is the perfect year to explore the stock market like never before. With low barriers to entry, high growth potential, and unmatched flexibility, the stock market is no longer just for Wall Street pros, it's for you. Ready to start investing smarter? Now is the best time to do so. If you found this video helpful, kindly like, subscribe to this channel and share this video to your friends. Thanks for watching and see you in the next video.